Good morning, good afternoon, good evening, depending on where you are on the planet, and welcome to the Monday the 6th of June Bull versus Bear webinar here. Steve Mully on the call for trade day. Welcome everyone. We're going to go through our usual regular run through here today, but a slight change for Monday as we always do, looking at the shape of the week, looking at the week ahead. We're going to take a look at that. We're going to take a look at the calendar overall, not just for the week, but a more detailed look at what we're seeing today. And also the macro fundamental geopolitical events, articles from the major news wires, what's driving markets right here, right now, today. And then we'll take a look at some charts as well. Let's kick off with the macroeconomic fundamentals. Just a quick look back in here. EU agreed a partial. So this is my weekly. I put this up every weekend. Comes out usually on the Sunday. You can get it in the technical watch, the research area of the members site on the trading room page. EU agreed on a partial ban on Russian oil. OPEC, bigger output hike than anticipated, but the market wanted more and oil price went higher. EU inflation last week at a record 8.1%. US data stays strong. The US non-farm payroll beat expectations at 390, but the equity market didn't like that. The equity market reacting of the view that, well, even though it's a strong economy and a strong labour market, that shows that there's potentially risk of the Fed being more hawkish down the line to contain inflation, and then that in turn would mean potentially a deeper recession. For me, I'm not quite buying that, but nevertheless, that's the way the market reacted. And that's what I mentioned in here. So we had a slight dip last week in US stock averages. European stock averages actually did fairly well last week. And stay the FTSE 100, for example, the UK index is near its a record high or a cycle high, the highs that were posted in the last few years. And what else do we see? US yields put back to higher yields. Dollar index, the dollar lost some ground gained some ground, having lost a significant ground the prior 2 weeks. Oil higher, copper higher, and gold was mostly higher last week. Going into this week, so let's have a look at this week. This is what we're really looking for. We've had Chinese PMI this morning. We've also had an expansion from China this morning. Talk a little bit about that in a minute, but of opening up again, easing COVID restrictions, and that's certainly seen as a positive by the market, sending Chinese Asian stocks high this morning and following through into US futures and European stocks this morning. Going forward into the week, tomorrow, Tuesday, we get the RBA interest rate decision. Now, this is going to be, I know what the markets you guys focusing on, mostly US centric, not really focusing too much on Australia, right? However, the RBA did shift from being far more dovish to more hawkish more recently. So it's going to be interesting to see where they stand because obviously the Australian economy is very, very reflective of what's going on in Asia and China particularly. So it'd be interesting to see if they're becoming more hawkish, moving back to more dovish in here. So I think that's going to be an important to watch, even though it's not going to directly impact any markets you guys are looking at. EU GDP is probably not going to do too much in here on Wednesday. ECB interest rate decision. That's going to be an important one, expecting the ECB to move towards relaxing their quantitative easing, de facto quantitative tightening, and then also potentially to flag the first interest rate hike of their cycle potentially in July. And then the big data for the week, we do get Chinese CPI on Friday, but the big data for the week is US CPI on Friday. We also get the Canadian employment report. That's the main focus in a very data-light week, the US CPI data. Let's take a look at today's calendar in here. For a little bit more focus, you see there's hardly anything in there, so it's a very, very, very light calendar going into today. Nothing to really speak of. Right, but what else has happened? So we do have in here recession fears. Most economists say US recession is unlikely in the immediate future, given the strength of the job market. So that's what I just mentioned in there that we're seeing in here. China reopening, mentioned that as well. China's worst COVID-19 outbreak is ending. Cases are falling, and Shanghai and Beijing reopening in here. All good. Chinese stock rose higher, taking Asian and emerging Asian equities higher also in here going into today. And then we've had a follow through into Europe and US futures this morning. Kind of the breaking news this morning, UK Prime Minister Boris Johnson faced a leadership vote by the Conservative Party on Monday following a series of scandals. So that's an internal vote amongst the Conservative Party, but obviously if he loses that vote, then that's a negative. Expectation at the moment that he is going to retain power. However, we never know, right? There's a lack of obvious successes at the moment, but it's definitely a negative and will dent his leadership. Oil going higher. Saudi Arabia signaled confidence in demand with a bigger than expected price increase of its crude for Asia in July as China, the world's top contributor, cautiously emerges from lockdowns. So yeah, oil pushing higher in here, get higher in here this morning, despite what we saw last week with OPEC Plus hiking output. And calendar is like with a blank slate of data, and we've already mentioned that US CPI is due on Friday, so we've already gone through that. Let's take a look at, so just basically recapping a lot of what I've said already. Stock futures rise, mood improves, dollar dips. So back into a risk on. Nasdaq 100 future jumps as China concludes tech probe. So that's helping, as well as the unlocking, the easing of restrictions in China is helping there as well. Basic resources lead equity gains in Europe. Copper surging higher this morning. Pound trades in untested waters as Johnson faces rebellion. We've covered that. Cable actually went higher on Monday. So that's the dollar weakness also. So the market not really reacting. So really not cable. So cable was pound dollar. Pound dollar going up. That's more to do with dollar weakness that we've seen across the board in this morning as we've gone back into risk on. Dollar seen as more of a safe haven currency. So dollar weakening in here this morning. So we have seen pound dollar higher in here today, but that's more to do with dollar weakness than pound strength. Although pound is outperforming the euro in here this morning as well. So that says something about how not worried the markets are about this vote of no confidence with Boris Johnson. Futures rebound as China's ADRs rally, tech growth stocks rise in here. So we've already talked about that as well. What else do we have in here? Banks and commodity stocks, we've already mentioned that. Lift markets, ECB meeting is going to be important. Oil price hitting $120 as Saudi July price rise eclipses the OPEC Plus deal. What else? Boris Johnson, Partygate, vote of no confidence vote for Boris Johnson. And then where are we as we stand this morning? Well, European stocks up decent in here, between half, but most of them are over 1% up in here on the back of that Asian rally, with Chinese stocks higher in here. So Asian stocks and European stocks following through to the upside, around 1%, just a little over 1%, some of these stock indices this morning. And where are we on the US indices? We're having lost ground back on Friday after the employment report, down about 1% on the Dow, just over 1.5% on the S&P. Nasdaq was over 2% down. Strong rebounds in here. So Nasdaq's got back most of the losses in here. S&P similar, 1% back up, having lost 1.6 on Friday. Dow's nearly erased the losses from Friday this morning already. So we'll see how we open up. Quick nod to the Fed tool in here. So we do have the in just over a week's time, we get the Fed decision, but pretty much nailed on now for a 50 basis point hike. Outside chance of some more, but very doubtful of that. And then in here, looking then for another 50 basis point hike in here, with outside chance of a bigger hike in the July meeting. So pretty much nailing on those. And we've looked at this previously. This is kind of hovering around the same numbers. So this is then for another hike there of a 50 in the September meeting. But risk in here of it going either way, maybe only a 25 basis point hike or maybe a 75 into September. So really indecision because we haven't got that guidance yet from the Fed. And the Fed, you're obviously going to be waiting and seeing how the data comes through. Right, a whistle-stop tour of some of the charts. So there we see the setbacks. We got up, it was a really strong rally the week before, really a consolidation week. We dipped lower early part of the week, rallied strongly on Thursday, back lower on Friday, back up this morning. So consolidation, I would class this as high-level consolidation. We looked at this last week in here, and we looked at there's the Fibbo just Thursday's move, and we gave up a lot of Thursday's move, obviously. But then if we go for the bigger Fibbo in here, if I zoom out, we had that really strong recovery rally in here. But if we look at the bigger Fibbo in here of the whole move, the market held, remember, the 38.2% of the whole rally that we saw from the midpoint of May. So we held above the 38.2%, rebounded twice off of this area here, and then above there, and then, now we've reversed. If we zoom in, we've reversed that kind of down move. This is the 15-minute chart on the S&P. There's Friday's down move. We've kind of reversed that already. And if we go and put the Fibbo on that, where are we? Well, we've got back a big chunk of that now. So look, through the 61.8. So that's kind of neutralized. We've already this morning neutralized by going through the 61.8% retracement of the whole of the sell-off of Thursday through Friday last week. We've neutralized that down move. And then for me, then we've kind of had a little run out of steam. No surprising that we've run out of steam given all of this move has been in pre-market hours, Monday morning hours. And then the market's dipped and then rebounded already. And if you look at just from the rebound, if I take off this Fibbo, and then we put the fib of just today's price action, the rebound that we're seeing, no surprise to say we're nowhere near. So we're actually holding above even the very highest retracement, the 23.6. We're not even down to that. We've dipped and we've rebounded already. I think, either for me, it's obviously from the long side in here, looking for a push above even just this little overnight, this recent high, the very, very recent high for the last half an hour. So 41.5275, or just waiting for the break of the high, the current high, 41.56.5. And then I think we can regain all of Friday's losses and then maybe higher today. So looking up here somewhere. Similar story for the Nasdaq in here. So pretty much wiped out Thursday's gains on Friday, but look, back above. We're about halfway back in here on the Nasdaq. And if we again zoom in on the Nasdaq, so again, get rid of these shorter term analysis that we had in here from Friday. And if I come across to so you can see we defended in here. Again, on the bigger chart, if I do from the whole retracement, the whole move, we looked at this previously, I think. So, we could take it from this move. If I actually take it from the more recent high of the whole move, in here, you can see the market defending the 38.2% retracement. And then if we zoom in some more, what have we got back so far? I think we're about halfway back. So yeah, look, just over halfway back. And then the little worry in here with these current candlesticks on the Nasdaq, if it undercuts this low, looks a little bit of a worry in here. There's the recovery uptrend. Put the uptrend just from, this is the overnight activity. This is this morning's activity. A little bit of a worry here, a little bit of a wobble, but I'd be buying in between either this low or in towards the trend line, looking for the dip into here. Might dip a little bit further into the equity market, the actual cash market open, but looking for it to defend this area. So defending the area between 12 like 700 down to like 12. Where are we in here? 12,705 to 695, that area there, and looking to, that's my buy zone. That'd be the buy zone in here. Maybe a stop down below this impulse low at 12,657, 655, or buying a break through the highs, and then looking again for this. This has got further to go, right? Back to the highs, back up to the highs. You could easily be up into here, up towards like 12,8, 28, 40, maybe up to 12,9, low light 12,900s going into today on the top side. Quick nod to oil and gold. So oil, as we said, first of all, rampant, staying strong, another new high, really. So that turnaround on Thursday, rejecting the topping pattern, strong push higher, new high, and then higher again. Now we have dipped back lower. Dip back lower is only going to help the equity market in here, but really, you'd look at that dip lower in here. Let me get rid of all the old analysis. This dip back lower, looking this as a buy opportunity. Little flag pattern forming at the moment. So you've got this strong uptrend. So this is from, you actually broke the uptrend, but this is important as well. So when the market's a good uptrend line, so this is the sell-off low that we saw last Thursday, the spike low, and then the aggressive rebound after the OPEC Plus announcement. And you can see the market in here goes sideways, horizontal break of the trend line. What does it do when it breaks the trend line? Nothing. Right, so when you get a break of the trend line, a horizontal break one is not as important because the market then is just going through it, price action, marking time, consolidating. Then don't get any. And then when you get a horizontal break, if you don't get some kind of impulsive move, it tells you the market's really either not respecting the trend line, or more likely it's the market is still in the positive trend. So it's just in a consolidation phase. It's Monday morning and it's holding above this low here. Again, if we put the fib of the whole rally from last Thursday. In here, you'll see we're way from even getting close to the 23.6, right? 23.6 is down here. So, and you're in this kind of little consolidation triangle. So just waiting for a breakout from here. That one's not going to be particularly useful. I'd more likely actually pull that down and redraw that like through here. But even that, no matter where you draw this, we're breaking out on a horizontal basis there. Really, it's the highs and lows. It's more of a rectangle now. So, looking to either break through the lows, below 119, or back through like 120.20, gives you your buy sell signals there on oil. Gold, So a little bit of a disappointment on Friday. Market dipped back lower. The underlying positivity is still there. That dip back lower was when we saw dollar rally as stocks sold off. But now stocks back high. Remember, there is a, if you look at this chart in here, and we go to well, I'm not going to go back. It's going to take too much long flicking. But we looked at this back on Friday. This looks like the S&P pretty much down here, particularly this bottoming portion. This portion here from the sell-off from the middle of April through to the basing of late part of May, and then this price action over the past week, very, very similar to the S&P. We've got a positive correlation with the S&P. That's because there's a negative correlation between the S&P and the dollar at the moment, and then a positive correlation and a negative correlation also, between the dollar and gold. So negative correlation dollar gold, negative correlation dollar and the S&P means we've got a positive correlation between the S&P and gold. So rebounding now we're underperforming. You can see this is definitely underperforming on the rebound in here. So I would still, given the correlation, be looking to buy into this one in here at the moment. So kind of been sideways in here, but looking to buy in the break higher. Wouldn't want to go long though until I get a confirmation. And where's that confirmation going to come from? Well, the confirmation's going to come there. If we look, see if it will allow me just to pull this one out. And no, that's not going to do that, is it? And let me pivot. Yeah, well, okay. So look, we're flirting with this trend line in here. We're flirting with that trend line at the moment. That comes off of there. Just need to redraw that here. Playing with that trend line right now. I would probably not want to even get a little impulsive move now. Probably back above this little overnight peak. That peak 1859.2 up through there for me is more bullish, and then happy to be long gold given the positive correlation. However, if it starts to undercut down here, down for 1853, it looks more negative. Certainly looks negative below 18. This low here, 1840. Where are we? 1849.7. So just a wary bull on gold. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Stay safe. I'll be back. And we have had some, sorry, I need to put this in at the end. We have had some issues. Apologies for issues if you've experienced anything over the weekend. James has been working tirelessly over the weekend with our development team to get everything back up and running in place. By end of day, close of business today, if you've got any kind of data missing, or that should be updated as we run the scripts at the end of the day. So apologies if you've had any issues. Hopefully they're being rectified. We're doing our best to get them fully rectified, but it doesn't stop you trading and continuing the evaluation challenge. You guys on the 14-day free trial, you can still go ahead and go through the 14-day free trial. So, but our apologies, but beyond our control, unfortunately. But we are on it and been working hard, and we are nearly rectified. So have a great day, great trading day. Stay safe, and I'll be back with you another webinar tomorrow.